Hi guys, welcome back to the channel. In this quick video, I'm going to talk about the 4 mistakes that I see people making with stop losses. Uh, Before we just get into that video, as a side note, this is Euro USD, and today is the 12th of July 2022. We have the dollar and the euro achieving what is called parity, where the US dollar is basically equal to 1 euro. It happened today. We finally reached that level, this level, where $1 is equal to 1 euro. So it's going to be interesting where we are going to go from here. If you want to learn about this, let's just go to the monthly. This thing last happened to in 2002. Yeah, you can see where it last happened in 2002, around November, December 2002, or maybe it did again, but basically 2002 it happened. So we are going to be seeing whether we are now going to go back this way, or we are going to continue just going this way. Another interesting fact that has happened on the Euro USD pair, the US dollar is now equal to 1 euro. Okay, let's get back to our video. By the way, if you are new on this channel, please consider subscribing so that you don't miss any future videos. If you're looking to download stuff, Forex robots, indicators, books, and stuff like that that people are selling out there, there are links in the description box below. You can download everything for free. Everything that we do on this channel is for free. So visit those links in the description box below. Many people also ask me about the broker that I use. Their link is in the description box below. One of the best brokers in the world, about winning, and no complaints about them in my 5 years of using them. So go ahead and sign up with them. You can just sign up with $5 and you start trading a real live trading account. Okay, let's get back to our video. I think let's drop down to 1 hour, or maybe let's go down to 30 minutes. I don't know. Okay, so in this video, we are just going to look at some of the common mistakes that I've noticed people making with what? With stop losses. With stop losses. How many times have you placed a stop loss and you get taken out and you just watch the market continue going your way, and you bang your head against the wall, against your table, against your laptop, whatever? You knew you were correct about the move, but you are out of that move. What happened? So one of the reasons why it happens is because you are doing your stop losses very wrong. Now let's say you were doing your analysis. This is the first mistake that I've seen people doing. Let's say you were doing your analysis, you were in this zone. I'm not giving perfect examples, so just bear with me. I'm just trying to illustrate my points. Let's say you probably were doing your analysis, higher time frames and everything, and you checked everything, and you were confident that what this thing was going to drop. Let's just give it a lime line colors there so that we can distinguish it from our stop loss. And you sold there. Do you know the mistake that people do? Let's say we put our TP here. Let's just make it blue. Let's just because this is how I love to trade. Let's just put our TP there in blue. Let me maybe increase the width so that we can all see. Okay, I think that's visible. Let's just increase the width on that. I hope that's visible. Then let's find a stop loss. Let's just change values on that. Okay, so let's say this is our theoretical trade. Somebody spotted that yes, indeed, Euro USD was going to continue dropping, and perfectly they spotted this zone for an entry. Do you know the first mistake that people do is they come and set their stop loss there because they don't want to lose a lot of money. So people tend to what? To set their stop losses too tight. Yes, we know everybody wants to risk less and make more in trading. But this, when it happens, let's just zoom in a bit. This is what happens. Let's say you entered here, or you managed to enter in this area, and you are what? Expecting price to do this. Most people get taken out by this last move, this last test of the zone. This last test of the zone, it usually comes and it takes them out, and then they watch what price move in their direction, but they are out of the trade, and sometimes they never get back in the trade because they are frustrated. They thought maybe it's, I was wrong, maybe something happened. So the first mistake that you want to avoid when you are when you are setting your stop losses is setting them too tight, because this happens sometimes. The wicks are even larger and you can easily get taken out. So you need to always give your trades a room to breathe with regards to what? To stop losses. Even when price starts moving your way, when start price starts moving your way, many people, let's say the trade is here, uh, maybe let's just take this and illustrate price movement. The moment price starts moving their way and they are in a blue, they what? They quickly what? Move their stop loss. And as price moves, they what? They are moving their what? Their stop loss. And they move it so tightly. They are trailing the position too tightly, and they are easily they easily get taken out of that position, because let's face it, price doesn't just drop in a straight line. It goes up, down, down, up, down, up, down. Oh, that's how it drops. And the opposite, it when it goes up, it also goes up, down, up, down, up, down. That's what it does. So you need, when you're trailing your position, to also account for those retests, those zigzags. You need to account for those zigzags. So a clever person would say price when it moves to a certain point, especially if it moves to a technical level, then you move what? Your stop loss just slightly into profit. Yes, you might be wrong. Yes, you might lose a position. Maybe this comes back and it does take you out. Well, if you have another chance and you are still confident in that position, you take another trade. Now, what you want to do is you want to wait for the first push up, the first reversal, and as price then starts going again the direction that you want it, you use that for your trailing stop, for your first trailing stop. Then again price moves this and it comes back and it what? It drops. You use that as what? As a basis for what? For your trailing stop. And it again does that, and you are just following what it does with the zigzag. This is just theoretical, so just bear with me. What I usually love to do is, the moment we touch this middle zone, this is middle zone. Remember, my TP is around here. This is how I trade. So around this middle zone, that's where I take out 50% of my position. That's how I trade. It has worked for me. So yeah, I take out 50% of my position so that at least I've taken out what some money of that trade. Whatever happens to it, at least I've taken out some money out of it. My TP is what is still there. Then this might happen. Of course, you might get taken out, like what happened here. At least I taken out 50% of my position on this initial move, or you might actually not get taken out here, and price might continue what going down. And then what I usually do on that remainder, when price reaches around this zone, my TP is still here, and price gets around this area, I usually take out another 25%. Then I leave the 25% of that position to what to continue to go and touch my TP. At least if anything happens and it doesn't really go and touch my TP, and eventually my trailing stop catches up, at least I got out with a good 75% of that position. So that's how you handle stop losses. First mistake: avoid setting them too tight. You're going to give them room to breathe. Whether it's the stop loss, the initial stop loss, or it's also the break even, and also when you are trailing your position, don't move your stop loss too tight against a price. Give price room to breathe. Second point is actually the opposite. You find people, they actually have a stop loss and they set it maybe here, which is too wide, or they set it there, or they don't even set it at all. Now, this might happen that price eventually just did this and it did that. Now, because your stop loss is what too wide, you end up risking more than you should have lost. So you need to strike a balance between what between your stop loss, or how much you are willing to lose, as well as giving price room to what to breathe and do its whatever thing that it does. Okay. Third point that I've seen people, the mistake that I've seen people making is just putting a stop where everybody just puts their stops. Let's face it. For many years now, trading education has remained the same. That's that. Now I've deleted the things that I didn't want to delete. Okay. So for many years now, trading education has remained the same. We have learned the same candlestick patterns, the same flags, the same M's and W's, the same for decades now. So you find that many people always abide by the rule that you need to what to set your stop loss 30 pips. Where is our 30 pips? Our 30 pips is somewhere there. The common textbook in Forex tells you that your stop loss needs to be 30 pips. And people just go with that. They don't even look at the asset that they are trading, the time of the day that they are trading that asset, anything else that might be happening in the world, and that might be affecting the movement of that asset. They just read the book. The book said 30 pips. They just go and what put a 30 pip stop loss. And if you believe in market manipulation, the brokers know where everybody has got their stop losses clustered around that 30 pip zone, no, 30 pips on, and they can easily bring out price, take everyone out, and continue what in their direction. So you want to be a smart person and not just join the cluster of stop losses that are around the 30 pip mark. That is the standard taught in every forex textbook. You want to find your own level where people are less likely to be scattered there. fourth point, because I want to close this video soon, I want to end it soon. What you also want to do is the mistake that people do. What you want to avoid is, I've noticed that people have a tendency of setting their stop loss according to dollar value. So let's say this is Euro USD, what we have here. Maybe let's say, for example, this is theoretical. You enter a standard lot, you sell a standard lot here, all good and fine. But then, as you pull your stop loss, you realize that every pip is actually equal to $1. Many people then set their stop loss according to the dollar amount. They say to themselves, I'm only willing to lose $10. I'm not willing to lose any more than that. So they are not looking and realizing that if you are saying every pip is $1 and you are only willing to lose $10, it means your stop loss is only going to be 10 pips. Your stop loss is going to be 10 pips, which is what? Going to be a too tight stop loss. It's going to be very tight. If you say you are only going to be risking $20 in that trade, obviously your stop loss is only going to be 20 pips, which is still relatively tight as well. So don't look at the dollar amount. What you want to do when you're looking at setting your stop losses rather is looking at technical levels. If you're a technical trader like me, look for a technical level that makes sense. That's where you want to just put your stop loss. Don't mind about the dollar amount that you seem likely to lose and stuff like that. What you want to do is, if you are afraid so much of losing so much money, then you need to adjust your lot size, not your stop loss. It starts with your position size. If you are just scared of losing a lot of money in trading, then it means the lot sizing that you have is the wrong lot sizing in the first place. You need to reduce that lot sizing so that you are able to have a bigger, more comfortable stop loss. I hope this video helps somebody. Like the video, subscribe if you're not yet subscribed. Until next time, bye.